Hi guys, James here from Mayor Mansfield & Co. Well, another week's gone past in this crazy environment we now live, and with that comes another government stimulus package. This one's the mother of all stimulus packages, estimated to cost the government around $130 billion. This stimulus package basically consists of one item. It's called the JobKeeper Payment. How it's going to work is that it's going to be a subsidy from the government to employers of both small and large businesses of $1,500 a fortnight for each individual employee that they employ. It's going to last for a period of 6 months. The government have brought this stimulus package out to obviously help businesses who have been severely affected from the coronavirus due to the fact that they've had to close or they've seen a big downturn in their revenue. The government are trying to provide stimulus to employers of business so that they can still engage their employees, so that when this is all over, that their business can return to normal as soon as possible. If they've got the same employees still on the books, they know that they trusted those employees, they've worked there before, business should hopefully be able to return to normal as soon as possible after this pandemic is over. So to be eligible as an employer for this subsidy from the government, there's a few items that we need to look at. The first one is if your business turns over less than $1 billion, you need to be able to prove to the government that your revenue has decreased by at least 30% as a direct result of the coronavirus. If your turnover is above $1 billion, which I don't know many people's businesses who are, then you have to be able to prove that your business has had a downturn in revenue of at least 50%. But getting back to the one that fits most of our clients and most of the people that I know, the reduction of 30% in your business turnover. That's the big eligibility requirement that we need to pass to be able to get access to this JobKeeper payment. So basically how this is going to work is that the government are going to ask for proof, being financials or something like that, to prove that your revenue has decreased in this current period to a comparable period from a previous period before. So basically what they're looking at is a 1 month period is the minimum period that they will take to see the reduction. So they'll be looking at March 2020's turnover versus March 2019. In that period, if your revenue has decreased by 30%, you're an eligible employer. Now that also includes sole traders and partners in a partnership. So if you're a sole trader or a trading partnership and you can prove that your revenue in March 2020 has dropped by 30% compared to the comparable period being March 2019, then you will be eligible for this JobKeeper payment. So what we're finding is a lot of businesses are saying to us, well, look, I did a lot of work in February, which I'm still collecting money for in March, or I've still got work on at the moment, but then everything's drying up. So the way we see this work is that you probably won't be eligible at the present because you won't be able to prove that your March 2020 revenue has dropped by 30% in comparison to your March 2019. So what we're thinking is going to happen is that you will need to wait at least another month. So you'll have to wait till the end of April, and then we can prove, hopefully by that stage, or maybe not hopefully, but hopefully by that stage you can prove that your revenue in April 2020 has dropped 30% in comparison to your April 2019 revenue. Once you do that, you then pass the eligibility requirements. So then we look at what employees this takes into account. So the first two employees that we look that most people have are permanent part-time employees or full-time employees. So to be eligible, the employees have needed to be on the books prior to the 1st of March 2020. So you can't go and add any employees on now. So for permanent part-time and full-time employees, if they were registered prior to the 1st of March 2020 as an employee under you, then they are eligible. Casual employees are a little bit different. Casual employees are still eligible as long as we can prove that they have been a regular casual employee to the business for a 12-month period prior to the 1st of March 2020. So if you've engaged that casual employee prior to the 1st of March 2019 and they've done casual employment for you for the last 12 months up to the 1st of March 2020, they will also be eligible. Now, where the government's come to play here also is they've said that all employees, anyone who has been stood down or you've recently made redundant or retrenched from the 1st of March 2020, as long as they were on the books prior to the 1st of March 2020, you can re-engage that employee. So you can get in contact with that employee and say to them, look, under this JobKeeper payment, I can now re-engage you as part of our business and I can pay you that $1,500 a fortnight. Hopefully that's then enough for them, and then they stay engaged with your business so that when this pandemic is over and everything returns back to normal, they can come back to work on a full-time basis. How the payments are going to work is basically everything's run through the ATO. Again, unlike the cash boost, this process must be applied for. Currently on the ATO website, there is a link for the JobKeeper payment. It's an expression of interest. Basically, you go in there, you put your business details, all your contact details, and they're going to keep you updated on the process. So they will send you all forms and everything that needs to happen. They will also tell you how we need to provide the proof that our income has dropped by that 30%. So make sure you get on there sort of ASAP and get registered. The ATO, once you're eligible, it will be backdated to the 30th of the 3rd, but it's paid monthly in arrears. So the first payment will be payable in the first week of May, and essentially that will cover the wages paid to employees from the 30th of the 3rd, which was yesterday when this was announced, up until the end of April. So you still need to pay your employees based on those figures. So they're not going to give you the $750 a week or the $1,500 a fortnight if you didn't pay your employees because they were stood down. You need to re-engage those employees now and pay them out of your cash flow for the next month, but then the government will be reimbursing you for that amount that you have paid them. So it's payable monthly by the ATO in arrears. A couple of other things that we need to make mention of is that if you're paying an employee now based on the contract that they've signed and they're still getting their full wage figure, if you haven't agreed with that employee that they need to take a reduction in their wage, you need to keep paying them the same amount. So basically, if they're getting, $2,000 a week, you need to keep paying them that $2,000 a week, but you will get that $750 a week subsidy from the government. So therefore, in the end, you're only out of pocket the $1,250 a week compared to what you were previously, being the $2,000. For those employees that earn less than the $750 a week or the $1,500 a fortnight, they will still receive the $1,500. This payment is a flat amount for all employees, no matter what they earn. So if you've got a casual or a permanent part-time employee that earns $300 or $400 a week, they will still receive, or the business will still receive, the $750 a week or the $1,500 a fortnight. Now, one of the strict rules that the ATO has come out with is that amount must be passed on to the employee. So again, going back to my example, if you have an employee that is earning $500 a week normally, you're eligible, you apply and you receive these payments. You will receive the $1,500 a fortnight or the $750 a week. You need to pay that employee the minimum $750 a week. You cannot pay them less and pocket the rest. That also goes for the employees that you re-engage. So the employees that you re-engage, being the ones that you've stood down without pay or the ones that you have made redundant, they will come back and you need to pay them at least that minimum $750 a week. One thing to make mention of, which the government didn't make mention of yesterday, is that's a gross wage, a pre-tax wage. So tax needs to be applied on that. Now, the tax on the $750 a week is about $85 a week. So the employee will get the net. They won't get the full $750 or $1,500 a fortnight. They'll get about $85 less into their bank account. So just make sure your employees are aware that tax still needs to be withheld on that amount of money. Now, one of the other good things associated with this for cash flow purposes anyways, the government have come out and said that super guarantee, so the 9.5% super that is normally paid on an employee's wages, does not have to be paid on this. If the employer wants to pay it, by all means they can pay it on it, but it is not a requirement by the government. So the 9.5% super does not need to be paid on this. So that again will obviously save you some cash flow. Where you've got an employee that might have multiple jobs, so if you're a restaurant and you've got an employee who also works retail, they can only get the $1,500 payment from one employer. So they can't get it from, if they're working at Myer during the week and then a restaurant on the weekend, they can't get it from both employers. They can only nominate the one employer that they get it for. The ATO is saying normally the employer that gets nominated will be the one that they're claiming the tax-free threshold with. So if you're claiming the tax-free threshold with your retail job, you need to let them know that you're going to apply for the $750 or the $1,500, or they need to apply on your behalf. But then you also need to tell your restaurant owner who's employing you that you're receiving that payment from your other employer, because they can't double dip. You're not going to get it twice. One of the good things though is they can still get paid from their other employer. So they could get $750 from their retail employer, being the minimum. And then whatever they're working at their other employer on the weekends or whatever, they can still get that top-up payment. So that sort of works out well too. So really, really good stimulus item. Should be able to help a lot of small business stay around a lot longer. The government's trying to do everything they can in terms of wage subsidies, tax concessions with the cash boost. Obviously that you need to look at now dealing with landlords and all that sort of stuff. So if your business has been heavily affected by all of this, the amount of money that we can save is going to allow you to lay dormant for longer. That's what the ATO's intentions are. They're trying to get business to be able to get through this period by laying dormant, by the use of stimulus package and negotiations with landlords and all of that sort of stuff. So if you can do that, make sure that you get onto these registrations. So there's a couple of huge dates coming up that everyone needs to be very important with and on top of. So today is obviously the 31st of March, which is the end of the quarter. So for those people that are going to get a refund as a result of the cash boost, and anyone really who's going to get something based on the cash boost, you need to look at getting your BASs done ASAP. I think you need to be on top of your accounts, because obviously in terms of the JobKeeper, we need to be able to provide accounts to prove that you've had a reduction in your 30% in your turnover to be able to be eligible. So they need to be done up to date, and they need to be done up to date to get your BASs done. Also, we've got the 2nd of April being when they're going to release the forms for the 50% apprentice subsidy. So we need to be on top of those too. Give us a call if you need anything. Obviously, we're all around and we're here to help. So if you need assistance in getting your accounts up to date, or lodgement of your BAS, or where to find forms associated with the JobKeeper and also the 50% apprentice rebate, let us know. We're here to help. One of the other quick items that I wanted to mention that came out of yesterday also was a little change to the job seeker, which is the Centrelink payment. So basically with the Centrelink payment, previously it was spousal income tested. So if your spouse earned above $48,100, then you were ineligible to claim that amount as part of the job seeker. they've recently increased, as of yesterday, they've increased the spousal income test to $79,762. So basically what that means is that your spouse can earn $79,762 and you can still apply and get the full amount of that job seeker payment. Anything over that, it reduces up to a certain limit, and then if their income's above sort of 100 odd thousand, you get nothing. So that's something that you need to be aware of before going into Centrelink or before spending hours on the phone with Centrelink. You need to make sure that you're going to pass those tests before the application. So just to recap, businesses need to be able to prove that they've had a downturn of 30% in their turnover over a minimum period of 1 month to be eligible for this JobKeeper payment. If that fits you, make sure you get onto it straight away. Get onto the ATO website, click on that expression of interest, fill in your details so you're getting that. Make sure you're saving as much cash as you can. Everyone should be out there negotiating with landlords and all that sort of stuff. The government said they are going to make an announcement. I saw that they did put a reprieve where if you don't pay your rent, you can't get kicked out or evicted within a 6-month period. But I would be negotiating with landlords. I would be trying to apply for as much of these stimulus items as you can because they're huge. They're going to have a huge impact on the amount of businesses that survive. If a business goes dormant and you don't have to pay wages because the government is subsidising it, you don't have to pay rent, they're some of the major expenses in a business. It hopefully will allow a hell of a lot of businesses to survive and also to go back to normal a lot quicker as you're just re-engaging the same employees that you had before. You're not having to go out and look for more employees and all that. So business should be able to return to normal quicker than what would have happened prior to this JobKeeper payment stimulus item. That's about it for today. If you have any questions, make sure you let us know. Like I said, get onto everything ASAP. If your business is in lockdown or whatever, these things are going to make a huge difference. So the quicker you can get access to it, and as we know with government agencies before, getting these applications processed can be a timely exercise because everyone's going to be doing it. So first in, first served. The quicker you get in, the quicker you're going to look at getting the payments and being eligible. Like I said, give us a call if we can help with anything. Stay safe, and I'll talk to you soon. Thanks, guys.